Hi everyone, let's have a look at what Bitcoin might have in store for us next, starting with the most bullish Elliott Wave scenario on the medium time frame, where we're looking for this to be a wave 1, 2, 3, 4 and then a wave 5 to the upside. Now this wave 3 is shorter than a wave 1, which does not invalidate an impulse. It simply means that wave 5 has to be shorter than this wave 3 right now, because a wave 3 is not allowed to be the shortest wave in an impulsive structure to the upside. Now that basically means that this wave 5 has to be shorter than the 1-to-1 of this wave 3, which currently sits at 40.2k. So this is also the invalidation of this scenario. If we then look at this wave 3 and wave 4, this wave 3 over here had an extended wave 1, which means the targets for a wave 2, 3, 4 and 5 change, but all of these hit their most common target, so that actually looks very, very nice. And then inside this yellow wave 4, we then have this 3-wave structure, an ABC, which is an expanded flat, which is the most common corrective structure in a wave 4. If we then go to the daily time frame, I just want to show you that this wave B on the daily did not really close a daily candle above the 1.618, which is already quite a rare target for a wave B in an expanding flat. So that is something to take into account. It's definitely not a common target to reach the 1.618. And also this wave B looks a little bit weird because you're looking for a 3, 3 and then a 5-wave structure. But over here, this wave B does not really look like a 3-wave structure, right? It looks more like a 5-wave structure. It has to be a 3-wave structure in this scenario. So that is also why I have another scenario that I like to show you, where in this scenario, this is not a wave B high, but this is a wave 5 high of an impulsive move to the upside. This is the end of something, or a wave 3 potentially, and this is a corrective structure to the downside. So in this scenario, we're basically looking for this to be a 5-wave to the downside in a wave A, then we have B, and then we have a wave C to the downside, so a 3-wave corrective structure, where in this scenario we have a 1, 2, 3, 4, 5 finishing wave A, followed then now by a 3-wave correction, which then has to be a zigzag because of the impulsive structure that we have over here. And then also an ABC, where some of the common targets can be seen on the chart, the 0.5 to the 0.886. All of these are common targets for a wave B. But then we have a zigzag ABC for then eventually an impulsive structure to the downside in this wave C, where I think that the yellow target box down here is a very interesting target for this particular scenario, where this target box is between 24.8k and 24.3k. So that is definitely an area of interest in this particular scenario, where what is important at the moment is how high this wave A is going to go, the blue A. So the higher this wave A is going, the lower wave B has to go in order for this wave C to not take the highs over here, because the invalidation for this scenario is if price is going to take the highs. Because this is a 5-wave move, you then want a 3-wave correction and another 5-wave move to the downside. And if this wave A goes high, wave B needs to drop lower, because wave A and wave C have a 1-to-1 relationship, basically meaning that the length of wave A tends to be the length of wave C. So we have to wait and see how high this wave A is going in this particular scenario. But in both of the scenarios I've just shown you, it basically means that this structure over here has to be some sort of a 5-wave move. And I just want to zoom into this structure in particular, because it actually is probably, if it even is a 5-wave move, one of the weirdest 5-wave moves I've seen. Because if this is a downwards 1, 2, 3, 4, and this is a 5th wave, where eventually wave 5 did take then the low of wave 3. But if this is a 1, 2, 3, 4, 5, this has to be the 5th structure. Like, this has to be a wave 5. And as you can see, it then has to be some sort of a ending diagonal. Like, it really looks weird, to be honest. Now the wave 5 has to start over here with then a 1, 2, 3, 4, 5-wave structure. This is the only way I could see a potential 5 waves into this structure, and it also has a couple of weird targets. So if this is a wave 1, fine. Wave 2, okay, fine. Very, very shallow wave 2. Then we have this as a wave 3. Now usually a wave 3 and an expanding diagonal for a wave 5 is not crossing the 1.618. I mean, price just you could say, move below shortly before going up. So okay, you know, we can with a pinch of salt make this a correct structure. Then we have a 3-wave move over here, and then a wave 4 hitting at least the common target for a wave 4 in an expanding diagonal, in this then being a 1, 2, 3, 4. And then we have a 5-wave move to the downside, where the minimum requirement for this wave 5 is that it should be longer than wave 3, which has been shown with the 1-to-1. So yes, this wave 5 is longer, but the 1-to-1 is actually a rare target for a wave 5 in an expanding diagonal, because usually you expect wave 5 to go at least a little bit deeper. However, it is valid. So based on what we are seeing over here, you could say, yeah, this could be a 5-wave structure. It's incredibly rare. An expanding diagonal, also an expanding diagonal looking like this, is very, very rare. So that is also why this is the first time I'm actually showing this scenario right now, also because of the potential bullish scenarios that we have seeing this move to the upside, right? So this then is the potential wave 5 of an impulsive structure to the downside that we have over here, which either is a wave C, right, the end of something. This is then a wave C before we now continue to the upside. Or this is a wave A or a wave 1, meaning that this is an A followed then by a wave B and then a wave C, as I've just shown. Or in the most bearish scenario, this is a wave 1, 2, and continuation to the downside in a wave 3, but that is so unlikely at the moment, I don't have it on my chart. If we then zoom out just a little bit, or actually we don't have to, we can stay on the 1 hour over here. So the wave 4 scenario, right, the bearish scenario, where we're looking for a 1, 2, 1, 2, 3, 4, 5. Well, it pretty much looks like this blue wave 1 can be removed from the chart because of the size of this wave 4 that we have at the moment, which also actually in comparison to this wave 2 is starting to take a lot of time, to be honest. Like ending wave 4 over here was very nice. So if this was the end of a wave 4, it actually suits this wave 2 much better. A short and deep wave 2, a little bit of a range, shallow wave 4 hitting the 0.236 Fibonacci, taken from the high of 2 to the low of 3, and then eventually down for 5. That's actually the best case scenario, but then of course this wave 5 looks really weird. So in this scenario, as it stands, we still have the potential wave 4 over here. However, there's a couple of reasons this is starting to become quite unlikely. So first of all, we have the maximum target for a wave 4 as well as a wave C. So in this wave 4, if this is still part of a wave 4, it needs to be an expanding flat ABC to the upside, where this wave B in an ABC hit the requirements, the most common target for an expanding flat wave B, also hitting the daily naked point of control. So that is very nice. And then you get an impulsive move to the upside, which then has to be 5 waves in a C. But the most rare, or at least the rare target for a expanding flat in a basically a wave C, is the 2.618. And as you can see, currently as it stands, price is already above this rare target for an ABC. And also the 0.5 is well, it's quite common actually, but you don't want to see candles closing above the 0.5 for a wave 4 usually, taken from the high of 2 to the low of 3. And as it stands now, this 4-hour candle is above the 0.5. We have already closed 1-hour candle above the 0.5 as well, and also currently hitting the daily naked point of control at 28.8k. But as you can see, not a very confident reaction at this daily naked point of control, like wicking and moving down. We are ranging around the daily naked point of control, which currently is a little bit more bullish. So this scenario as it stands now is becoming less and less likely, where either the ABC that we have is the most likely scenario at the moment, or continuation to the upside in a potential wave 5 is the most probable scenario that we have. Now, how can you determine which one is the most likely one? Well, in an ABC, this wave B is going to be a 3-wave structure. So we are going to have a 3-wave structure in a B corrective for then an impulsive move to the upside in a wave C. And then if it is a wave C, you want to see the volume of this wave C quite similar to a wave A or lower than a wave A. While if this is going to be a wave 5 to the upside, and this is then a 1, 2, and then you expect a wave 3, the volume of this move to the upside, basically the second move up, should be significantly higher than the first structure over here in the wave 1. So that is how you can determine which move is going to be most likely, because as it stands now, this more bearish scenario starts to become a little bit less likely. It is not yet invalidated. I do want to tell you that it is not yet invalidated. I prefer a 4-hour candle closing above the 0.5, and the invalidation line that I have over here has not yet been reached at 29.5k. So as long as this stands, it's not yet invalidated, it just becomes less likely. If we then go to the low time frame scenario, which I've shared in a couple of videos as well, then after this potential expanding flat wave B, right, in an ABC, so we're basically zooming into the scenario that we had, what we were looking for after this wave B was upside. Now, you never know how high a potential wave C might go in an ABC, or of course, if this wave C is another structure in an ABC or 1, 2, 3, 4, 5 eventually. But what we did have is some very, very nice potential trading scenarios over here, potential trading setups, where the first setup was hitting the daily naked point of control, a 5-minute candle closing above the 105 for then the entry, for then a continuation to the upside. And then of course it's just going with the flow and see how price develops. The second move that we had was if price would move to the downside over here to create bullish divergences, as mentioned in my video that I made back then, and then creating bullish divergences, which gives the potential trading setup over here for then another long position to the upside. And yeah, the most common target area for a wave C is actually between the 1.618s over here. However, we pushed through like it was absolutely nothing. We also had a daily naked point of control over here that was not respected at all by price. It just went through. So therefore, more upside is expected and the potential trading scenarios can be extended and just moving along with price, right? In an Elliott Wave perspective or scenario, you might be able to move the stop loss to the upside in case price might go to the downside. But yeah, no financial advice, of course. These are just educational trading setups by all means. You have your own plan, your own strategy, and whatever you do. But this is from an educational point of view, how people could potentially trade Elliott Waves with some other confluences. And now, as it stands, well, the 2.618, I have it on my chart, a rare target for a wave C. But as you can see on the 15-minute, we are just climbing. We are not having any signs of slowing down. Volume is still absolutely massive. Look at the volume increasing as well while price is moving to the upside. And if we look at this structure, right, as this then being a 5-wave move, this then has to be a wave 1, a corrective wave 2, and this is then, in my opinion, still part of a wave 3. Like, if this, in my opinion, this is not a wave 4, maybe that is the wave 4 of this 1, 2, 3, 4, 5, right, and then a bigger 3, so maybe the wave 3 in green might be finished somewhere around here. But this wave 4, in my opinion, is not yet in. I'm still then looking for a potential wave 4 for then eventually a wave 5, which therefore also means that if this is the low time frame scenario in an ABC, which then is matching the medium time frame bearish scenario of a wave 4, it just becomes very unlikely, because this then is a wave 1, 2, this might be the high of 3, 4, expecting another move to the upside in a wave 5, which, you know, we're just ranging at the maximum target of a wave 4, the rare target of a wave C. Not really seeing any signs of slowing down around the daily naked point of control, so that scenario just seems a lot less likely. So yeah, this is what I wanted to say. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested, and for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.